Hey everyone, welcome back to Corporate Decoder, the place where we unpack the financial mysteries that keep CEOs up at night and investors on the edge of their seats. Today, we're looking at a company that might be teetering on the brink, but is fighting to stay in the game. Hold on to your hats because this might get bumpy. Before we dive in, if you dug this no fluff, straight to the point analysis for your investment decisions, make sure you hit that subscribe button. And hey, we've built an awesome community over on Discord where we break down these filings together. The link is in the description below. Alright, so what we have here is a report that tells us about a big event happening right now with Kaival Brands Innovations Group Incorporated. They are basically sending out an alert saying, hey, something important is going on and you need to know about it. This is called a Form 8K filing, and it's like the company's way of shouting from the rooftops about material news. The company we're talking about is Kaival Brands Innovations Group Incorporated. You might know them from their stock ticker symbol, Kaival. Now, this report is all about a crucial update regarding their listing on the stock market, specifically the NASDAQ capital market. You see, companies have to meet certain rules to stay listed on major stock exchanges. Like NASDAQ, one of the big ones is keeping their stock price above a certain level. For NASDAQ, a common minimum is $1 per share. Back in April, Kaival Brands received a letter. The folks at NASDAQ, the ones who decide who gets to trade on their market, told them they weren't meeting that minimum dollar share price. This is a serious red flag because it suggests investors aren't valuing the company's stock very highly. But here is where things get interesting. On the 2nd of October, Kaival Brands got some breathing room. NASDAQ has granted them an extra 180 days, effectively giving them until the 30th of March of next year, 2026. To fix this, that's about 6 more months to get their stock price back up. So, how do they plan to do this? The company has told NASDAQ they are considering a reverse stock split. Now, a reverse stock split is a move where a company combines its existing shares into fewer, higher price shares. It doesn't change the company's overall value, but it can boost the share price to meet exchange requirements. Think of it like trading in $10 bills for $100 bill. You still have the same amount of money, but the number of bills you hold is less. They might also just get lucky and have the stock price naturally climb above $1 for 10 consecutive business days. What happens if they can't pull it off by the 30th of March? Well, then their stock could be delisted. This means Kaival would no longer be traded on the NASDAQ capital market. This is a pretty significant event as it can make it harder for investors to buy or sell the stock and can damage a company's reputation. The company does have a safety net of sorts. If NASDAQ does decide to delist them, Kaival Brands can appeal that decision to a special panel. However, the report is very clear to read absolutely no guarantee that this appeal would be successful. It's a last resort and not a sure bet. For now, the company's stock is still trading on NASDAQ under the symbol Kaival. They are actively watching the stock price and exploring their options. So, while they've got a bit more time, the clock is definitely ticking. And signing off on this report is Mark Taines, the interim chief executive officer. This signature is pretty standard in these filings, basically confirming that the information presented is accurate and that the company is taking responsibility for it. Now, let's talk takeaways. Kaival Brands is in a precarious position. Receiving a second notice about not meeting the minimum bid price requirement, even with an extension, signals underlying issues with investor confidence or market perception. The threat of delisting is very real, and if it happens, it could severely impact liquidity and investor interest. The proposed solution, a reverse stock split, is a common tactic for companies in this situation, but it doesn't fix the fundamental reasons why the stock price fell in the first place. It is more of a cosmetic fix to maintain listing status. The company's future hinges on its ability to not only meet the minimum bid price, but more importantly, to demonstrate consistent growth and profitability that will genuinely increase investor confidence. Without that, even regaining compliance might just be a temporary bandage. The biggest risk here is that this situation erodes investor trust further, making it even harder for them to attract capital and execute their business strategy. So, what is my take? Kaival Brands is fighting for survival in the public markets. They've bought themselves some time, but the real challenge lies ahead. Investors should be watching closely to see if the company can articulate a convincing plan to create long-term value beyond just manipulating their stock price. Alright, that's our breakdown of Kaival Brands Innovations Group Incorporated's latest filing. What are your thoughts on their situation and what do you think this means for Kaival? Let us know in the comments below. If you found this analysis useful, please give this video a thumbs up and subscribe for more in-depth corporate insights. And don't forget to join the conversation on our Discord community, linked in the description. Thanks for watching and we'll see you in the next Decode.